The market is closed for Tilray Brands Inc. The last closing price was $1.015 on Wednesday, September 10, 2025, at 4 p.m. EST, reflecting a daily decline of 3.07% from the open. While the day's trading saw some volatile swings, with a high of $1.14 and a low of $1.08, the stock ultimately failed to hold its ground. For a company that has been a poster child for the speculative highs and brutal lows of the cannabis sector, this isn't a shocking result on the surface. However, the true story isn't in the single-day drop, but in the underlying currents that suggest this decline might be a subtle, calculated move rather than a sign of a failing business. The common expectation is that every downturn in a cannabis stock is another nail in the coffin, a consequence of overpromises and underdelivery. But a closer look reveals a more complex narrative, one where Tilray is shedding a portion of its speculative retail investor base to make way for a more fundamental and potentially more stable future. This isn't a collapse, it's a strategic de-risking, and the market's knee-jerk reaction may be missing the forest for the trees. The recent price action in Tilray Brands has been a microcosm of the entire cannabis investment space. A quick look at the charts shows a stock that has been on a wild ride, from a 52-week low of just over $0.35 to a high of $1.88. This volatility is a playground for active traders, especially those using platforms like Interactive Brokers or Robinhood, where the instant execution and low fees make short-term bets appealing. Over the last month, the stock has shown a significant rise, but that momentum has clearly faltered in recent sessions. The volume today was a substantial 16.28 million shares, a clear sign of high interest and active trading, but the net result was a push to the downside. The fact that the stock is now testing the lower end of its recent trading range suggests that a crucial battle is underway between buyers and sellers. On one side, you have the hopeful retail investors who are betting on a major U.S. legislative breakthrough. On the other, you have the institutional players and short sellers who remain skeptical of the timeline and scale of such a change. The short interest in Tilray remains elevated at over 13% of the float, a clear signal that a large number of professional investors are betting against the company's immediate prospects. This creates a fascinating tension. A major catalyst, like a significant piece of federal cannabis legislation, could trigger a massive short squeeze, sending the stock parabolic. But without it, the weight of that short position, combined with persistent dilution from capital raises, acts as a consistent drag on the share price. This is the reality that many online investors and those using individual brokerage accounts must grapple with. The stock isn't just a reflection of the company's business, it's a battleground for macroeconomic and political narratives. To understand the company's fundamentals, we have to look past the daily chart and into the core of its business. Tilray Brands Inc. is no longer just a cannabis producer. It has aggressively diversified its portfolio through strategic acquisitions, transforming itself into a global consumer packaged goods company. The company's portfolio now includes craft breweries like Sweetwater Brewing, Montauk Brewing, and Red Hook Brewery. This strategy is an attempt to de-risk its business from the unpredictable nature of cannabis legalization and regulation. While the cannabis division remains a core part of its identity, with a strong presence in Canada and a growing medical cannabis footprint in Germany and Italy, the beverage and wellness segments are meant to provide a more stable revenue stream. The last earnings report provided a classic example of this mixed reality. The company posted a beat on earnings per share, surprising analysts with a positive result, but missed on the top-line front. This suggests that while management is doing a commendable job of controlling costs and improving efficiency, the top-line growth, especially in the craft beer segment, which has been facing industry-wide declines, is not meeting expectations. This kind of nuanced performance is often lost on the quick-trigger investing sites and mobile apps. An investor performing their due diligence on fidelity or using an intelligent portfolio would see this and recognize the company is in a transitional phase, building a more resilient business model. The question is, can they build it fast enough to satisfy a market that demands immediate returns? The recent news flow around Tilray Brands reflects this multi-pronged approach. We've seen press releases about new medical cannabis strains in Germany, partnerships to expand distribution for Breckenridge Distillery in California, and even a collaboration between the Shock Top beer brand and Auntie Anne's pretzels. These are not the headlines of a failing cannabis company. They are the moves of a CPG giant trying to optimize its various business units. A key development was the company's announcement that it has regained compliance with Nasdaq's minimum bid price requirement. This is a crucial piece of news that removes the immediate threat of delisting and provides a sense of stability,
a factor that is vital for institutional investors who operate under strict mandates. However, this positive development is still overshadowed by the slow pace of U.S. federal cannabis reform. Despite whispers and rumors about potential federal rescheduling of cannabis, the progress has been painstakingly slow. This regulatory uncertainty is the single biggest headwind for Tilray and its peers. The entire cannabis investment thesis is predicated on the idea that the U.S. will open up, creating a massive new market. Until that happens, the stock will continue to trade on sentiment and speculation, making it a high-risk, high-reward proposition. From a long-term perspective, the future of Tilray rests on a few key pillars. First, its ability to achieve profitability and positive free cash flow, a milestone that has proven elusive for most in the sector. The focus on cost control and operational efficiency from recent earnings reports suggests this is a top priority. Second, the successful integration and growth of its non-cannabis businesses. If the beverage and wellness segments can provide a consistent and growing revenue stream, it will reduce the company's dependence on the volatile cannabis market and provide a more stable foundation. Third, and most importantly, the legislative environment. Any significant movement on federal cannabis legislation, whether through a change in scheduling or broader legislation, would be an instant and massive catalyst that could truly turn the tide and bring a flood of institutional money that has so far been on the sidelines. The risk, of course, is that these catalysts fail to materialize on an expected timeline, leaving the company to fight a long, drawn-out battle in a highly competitive market. It's a challenging landscape, but full of potential. For those of you considering investment help or even self-investing in this space, Tilray is a classic case study in why fundamental analysis is critical. It's not just about the hype, it's about a business trying to find its footing in a challenging environment. Investing in a stock like this requires a significant amount of research, well beyond just looking at the daily price. You have to understand the business model, the balance sheet, the competitive landscape, and the regulatory risks. It's a high-stakes game that requires a level of detail that a simple online investing platform might not provide on its own. It's why services like Schwab Intelligent Portfolios or a more hands-on Fidelity Wealth Management account can provide a level of oversight and diversification that a solo effort might miss. This isn't just a stock to buy and hold, it's a company to monitor and analyze closely. Before you make your decision, comment below and let me know, what do you think the single biggest catalyst will be for the Tilray stock price? U.S. legislation or a major new business acquisition? Ultimately, the story of Tilray Brands is a powerful lesson in market expectations versus reality. The expectation, fueled by early-stage euphoria, was that cannabis would be a straightforward path to riches. The reality has been a long, difficult, and often frustrating journey filled with regulatory hurdles, intense competition, and the need for a diversified business model to simply survive. The recent price dip isn't a sign of failure, but a moment of reckoning, a return to reality where the company's value is being scrutinized based on its tangible assets and operational performance, not just the potential of a future legislative landscape. The long-term success of Tilray Brands won't be defined by a single day's price movement, but by its ability to execute on its diversified strategy and navigate the ever-shifting legal and economic tides. It's a story of adaptation, not capitulation, and for a patient investor, that distinction is everything.